Tokenize, let's innovate, bringing answers to the digital state. From finance to games, we're redefining, connecting the dots, the future is shining.
We're going to kick off the AI section now, talk about the intersection of AI and RWA. So Michael, by the way, is the coolest person in the room because ask anybody their Telegram handle. I'm pretty happy I was able to get at Michael Terpin before my cousin Michael Terpin in Kentucky got it. Because, you know, we've fought over little domain names over the years. But he's Michael. At Michael. First name. That's because you knew Pavel, right? So give us a little background of your, sort of entry into technology, the curiosity that you have, and, how this has evolved to the formation of Unit and how you've kind of pivoted, because you've been Unit for a couple of years now, to now where you just raised $18 million and you're getting ready for your TGE.
Yep. Thanks so much, Michael. It's a pleasure to be here and great job with this event. So a bit of my background, I'm half Singaporean, half British. Been building applications since the mid-2000s. My parents were very involved in the dot-com bubble. They built one of the first tech companies in Asia doing supply chain and logistics. I got into coding in the mid-2000s. So after the dot-com bubble, we had Web 2 applications. When the iPhone came out in 2008, I thought, wow, smartphones, they're going to change the world, right? So I was one of the early iPhone and Android developers. And one of the first apps I built was for WikiLeaks. I built the WikiLeaks mobile Android app in 2010. I basically saw this video called Collateral Damage, and it was about innocent people being shot, or journalists in Iraq. And I thought, wow, I thought the Iraq war was good. And then I saw, journalists getting killed. I was like, wow, this is crazy. So I thought, how can I help? I'm an app developer. So I built the Android app for WikiLeaks. And then what happened in 2010 was the government basically froze our Visa donation channels, MasterCard, PayPal, and got me introduced to Bitcoin. So I got my first Bitcoin at 9 cents, late 2010. Built a video conferencing app, an encrypted video calling app around that time. Sold in 2013, grew it to a few million users. Also worked for the third biggest VC in Europe, Wellington Partners, who are seed investors in Spotify. Largely focused on Web 2 funds. It was an 800 million euro venture fund. Then I worked with the Founders Forum. It's the most exclusive tech conference in the world. So I sneaked into it in 2013 through the golf course. And, when I was inside...
Kind of like Steven Spielberg sneaking into the Universal Studio a lot to get a job when he was 18.
It's spot on. And, it's founder of Google, Amazon, Instagram, all of these super high profile people. You needed to have started a $500 million company to invite it. And in the following year, I started work with them. I rebuilt their systems, and it was probably one of the coolest tech gatherings there. And then fast forward, 2016 and 17, I saw what ICOs were. I was like, wow, this is such a cool way by which capital formation and fundraising could work. Having worked at one of the top VCs in Europe, being pitched thousands of deals a year and investing in maybe 20 or 30 of them, I thought, wow, crypto can be really cool as a means of fundraising, right? So I would say for the past 10 years, I've been focused on securitization and tokenization. Now I run my personal family office, early into Bitcoin, crowd sale in Ethereum, got into the BNB ICO, early into Solana, like many different layer ones. Now I'm very much focused on investing in tokenized businesses. So anything in the real world that involves using a coin as a means of having customers and employees have ownership, that's what really excites me. And we've built, I think, the most advanced platform for tokenization. So if you look at exchanges like Binance or Coinbase or Hyperliquid or things like this, they're all trading crypto assets, things like Bitcoin or Ethereum or Solana. What excites me most is trading the hundreds of millions of companies in the world and the billions of people in the world. And I think why this is such a big opportunity is, if you look at who has money in the world, the people who have money are the people who start companies or the ones who invest in them. These are the owners and things. The vast majority of people, of 8 billion people, they're basically just surviving. They're getting a paycheck, they're paying lots of taxes. And I think the cool thing about AI and crypto, it's going to democratize that ownership, right? Everyone's going to be a stakeholder in things. If you're an early user in Spotify or Uber or Airbnb, when they grew to a few $100 billion in valuation, you probably didn't get a piece of it, right? And the cool thing about tokens is they really distribute the value and ownership of things. Yep, that's a bit.
Fantastic. So, RWA has been arguably one of the newest narratives. I mean, I always like to say that each cycle, the altcoins at least have a new narrative every time. The last time it was all about NFTs and DeFi, which only started in the summer of 2020, and the metaverse. Metaverse hasn't done too well. NFTs, other than Pudgy Penguins, have not done too well. DeFi still keeps on rocking and innovating. This cycle, it seems like AI, RWA, and and Bitcoin innovation are sort of the three major narratives. Perhaps a little bit of multi-chain. Now you're really kind of going between the two. Now, what differentiates you from some of the ones who came out a little early in the cycle and have done really well, like Ondo? So what differentiates you from Ondo and a few others like them?
Great question. So, RWA a year and a half ago, we were both at Satoshi Roundtable, had a long chat with CZ there, and, talked a lot about RWA. He says RWA is really, really tough. Now, you fast forward a year and a half, RWA is the hot thing. I think the thing about RWA is most people think about it as just traditional finance wrapped in crypto. So, Ondo doing treasury bills, or tokenized stock. People talk about tokenized real estate. I find that pretty ordinary. It's like, it's kind of like what STOs are, right? It's traditional finance wrapped with crypto marketing, buzzword or sort of crypto layer. It's cool, it's going to attract a lot of institutional capital. Same with publicly traded companies holding Bitcoin. But where I think we really stand out is majority of companies in the world are private, and most projects or RWA protocols don't really tackle or touch those, right? So if you think of the hotel or the apartment you're staying in, right, tonight, last night, this past week, it's unlikely that most RWA protocols make it easy for the owner of that, whether it's an individual or a fund, to tokenize, right? If you think of the restaurant you had dinner with last night or the restaurant you went to for lunch today, allowing that business, which makes, $1 million a year or $5 million a year, to effectively IPO, that's not done by most tokenized technology. So I think what we offer is probably the simple, most powerful tool. It's its own blockchain connected to 16 different blockchains. We'd love to show a demo if we have time, but easily create a token, have an AMM attached to it, an automated market maker, and the unit coin basically collects 0.5% of all trading volume and fees. Right? When I was an investor in BNB in 2017, people said, "Hey, we don't need another centralized exchange." Right? We've got Poloniex, we've got Bittrex, right? And now Binance is way ahead as the number one leading exchange. The reason why I think we can be bigger than Binance is because Binance, OKX, Coinbase, they trade a few hundred assets, right? Where I would like our unit community to be, we have about 50,000 users and clients and about 1,300 assets. We want to trade hundreds of millions of assets. Every person in the room here, we should be able to buy a piece of them, right? So when they become more successful, when you become more successful, it's not just you who participate in the upside, it's everyone. Similar analogy, social media. If you look at 10 years ago, businesses didn't realize the power of social media, right? If someone told you someday I'm going to have 2,000 people following me, they'll be like, isn't that a bit stalkerish? That's a bit weird, right? And now it's so normal to follow people, to see people's social media updates. I also started one of the early dating apps in the UK, 2012, similar time to when Tinder came out. We were the biggest competitors in the UK. And people didn't think that, you would meet someone online. You'd be like, you're a creep or a weirdo, right? Now, 60% of people, new relationships are formed online. So I'm convinced that now most investments, right, if it has a coin, people are like, okay, that's a bit weird. I don't really trust crypto tokens. You don't need a coin. I'm convinced that in the next decade, if an investment isn't done through a token or a coin, people are going to say, why isn't this transparent? Or, why can't I see the cap table? Why isn't it liquid? And for me, I think that's the big golden opportunity.
So I was an early advisor to Polymath, and they were one of the innovators in sort of having a fungible cryptocurrency to then facilitate securities. How are you dealing with the issue of like securities, depending on the jurisdiction, are regulated, but yet you can still have a governance token that is just crypto, and it sounds like you kind of taking the fees in instead of like a piece of the company or of dividends, sort of gets around that a little bit. It makes it more like, say, a virtuals or AI16Z platform. What were your thoughts on that, and what jurisdictions are you feeling comfortable with your legality, and or is it global?
Yep. So I would say we're a global platform. We've been very much focused outside the US for the past decade. we have an office in New York, London, Dubai, and Hong Kong. The securities regulations, especially in the US, were the big reason why we've been relatively low key. But I feel now that not necessarily the floodgates are open, but now's the perfect opportunity to really show how tokenized securities can play such a big difference in fundraising, as well as for the liquidity of ownership. The reason why I think we're better than other tools are similar to Polymath. I'm a big fan of Trevor and how much they push for and pioneered the space. Is most of these tokenization tools and securitization tools, they have one coin or one token representing one share in a local company. The way we approach it is more similar to how it's done in Asia. In Asia, usually you have Singapore or Hong Kong as a holding entity for businesses in Thailand, Indonesia, Philippines, Vietnam, which move money to Singapore or Hong Kong. So me as an investor, I'm not interested in getting some Vietnamese equity or Thai equity or a company in the Philippines. All I care about is a Singapore or Hong Kong holding company. And we think that tokens will mimic that holding company. So let's say you have an LLC in the US, a limited company in the UK, whichever jurisdiction, you'll move money up to this token. And this token will basically have this wallet or a feature called a treasury. And the more money you move into that treasury, it pushes up the lowest price of that coin. So it sounds kind of complex, but I'll give you an example. So imagine I have Michael coin, right? And there's nothing in the treasury. Now, if you buy some Michael coin, your downside risk is 100%. Meaning if you try to sell it on the exchange to the pool and there's no liquidity, it will drop to zero. But if let's say the supply was 1 million and I put in 2 million of my investment profits or my earnings or salary or whatever into the treasury, now the lowest price is $2. That means on the exchange price, it will go above $2. $2 is the lowest price. And you know that in the worst case scenario, if you own one coin, you can go to this treasury, give your one coin back and receive $2. So it sets a lowest price, it sets a book value. And why this is so profound is because it basically protects the token holders and it allows you to easily see how to value an asset. Like how do you look at a publicly traded company or a stock and see its value? Sometimes you look at its underlying earnings, right? A multiple of its underlying earnings and whatever it has in its balance sheet. So we think that, people said with the internet, it's backed up by eyeballs. People said with apps, it's backed up by downloads, right? People say with coins, you just need a high valuation with lots of liquidity. I'm convinced that it's going to change. And how it's going to change is every single coin, wouldn't be a utility coin. It will be mimicking more like a business, a security where it would need earnings, it would need cash flows, and you'll be able to value this coin based on how much profit it generates. So the next generation of apps, of businesses or companies in the world, all will have a coin. And if that coin, let's say, generates $1 million in treasury growth, you'll be able to pay 3 or 4 times whatever its treasury is growing at. So let's say 4 million plus whatever's in the treasury. So maybe it was 2 million, so it'll be a 6 million market cap. So that's the big thesis. So with our unit coin, we're listing on all the big decentralized exchanges. We're on Solana, we're on Ethereum with Base, we're on Ton, we're in Sui and BNB, as well as 3 pools we have on our chain, which is Bitcoin, USDU, our stablecoin, and why this is cool is because we'll be able to tap into all these different markets. And in the coming weeks and months ahead, we plan to be a major recognized platform. Yeah.
Okay, it's fascinating.
Thanks.
So the unit token is collecting then the trading fees.
Spot on, exactly.
And now these are all private companies, but they're disclosing similar ways to public companies. I mean, they're not filing forms, because if you can see that there was moved in $1 million, what's to stop them from just rug pulling it?
Great point. So once you move it to the treasury in Bitcoin or USDT or USDC, you can't just take it out. So imagine I lend you some money, Michael, and you moved it up to your Michael Terpin treasury. You can't take it out and give it back to me. It belongs now effectively to all the token holders. So it's like, Berkshire Hathaway, it doesn't pay out dividends. It just retains it on.
Well, what if you need that cash to buy inventory?
It's the same as if you paid out dividends, but it's better because you see, if you pay out dividends, you could imagine the two of us own the company. I could give you some money, you pay me out dividends, I could give you the money. We could do it 50 times and make our books look really good. But if, let's say, I give you some money, you put in the treasury, now the lowest price goes up, people are going to say, okay, can I see how that...
So you're only going to put your profits in
only
there,
going to put your profits
not your operating capital. Okay.
That's correct. So when you create an account on Unit, right, really cool account abstraction, use your email, password, and PIN. I think it's the easiest onboarding experience of any blockchain or decentralized exchange, right? When you create a token, you basically have a bank and a treasury. The bank is the operating account. When you do a fundraise, that Bitcoin, ETH, Solana, BNB, TON, we support 16 different blockchains, go into the bank. You can use that to pay salaries, your rent, for operations, and that provides real-time transparency. The problem with public companies is you basically hope every earnings report it's going to be good. With this, you have it in real time. And to your point, when you move money from the bank to the treasury, that's where you put your profit and effectively where your dividends will go.
Now, it would seem under that model that it would be the slow growth, cash cow companies that would be the easiest to value. What if you're in a, kind of low margin, high growth environment? You still have to care about future projections.
Spot on. And I think the cool thing about this is the downside risk disclosure as well as the transparency, because I feel as if the reason why people are very scared of early stage investing is the lack of liquidity. So the cool thing about this is if you think every single Web2 company in the world, every single investment being liquid, that's super cool. The second cool thing is the transparency. You don't have to call the CFO and CEO and have this hard conversation about, hey, how much cash do you have on hand? How much runway do you have? You can at least see. And I think it's going to encourage businesses to be a lot more mindful of expenditure. So they're going to go, hey, should we, just spend more, or should we retain a bit and put into our...
So the tokenized private equity, then, say someone raises $1 million by selling those tokens, they'll get their... And then I have the token and I want to sell it. I'm not going to get it back from the company. I'm going to get it by someone else in the market thinking that that's a good deal, and just like any other market.
Spot on. And even if the treasury doesn't grow, that's totally fine, because people can basically value it on a future treasury growth. But the clear understanding is that someday that business will have to provide a product or service which generates profit, which pays the treasury. And, we're rolling out 25 different apps, from like an on-chain Uber to an on-chain Airbnb, Drivecoin, Staycoin, PokerCoin. It's like an on-chain poker app. And these are $15,000 market cap on-chain projects, like a Shopify called, Unit Shop, Unit Stay, Unit Drive. And I think these are great case studies, in the
15,000 or 15 million?
15,000. And so that...
Wow. So you could buy half the company for $7,500.
No, because we're giving the opportunity for 150 people to buy in $100.
I see.
And when it goes to 1.5 million, everyone's got 100x. All of them have very simple, clear business models. So let's say if you book to stay at one of my apartments, I keep 95% of the fee, 5% goes to the stay coin. If we played poker, 0.5% rake goes into the poker coin. If let's say I booked your unit drive, to drive me from Vegas to LA, it's not just short rides.
These are obviously very early stage, like, pre seed round financings. I guess to me, and this will be our last question because we're over time, would be, I think the success is going to be based on your typical public company is going to trade for about 10 times profits. Your typical private company is lucky to do 5 times. If you're able to move up the private closer to the public, then you got a winner.
It's true. I mean, like when I sold my video conferencing app, there was so many people that helped me with it. I didn't take any external financing from it, and I couldn't reward my early users, right? Or if you're an early user of an app, or if your favorite restaurant or nightclub or hotel, there's no opportunity for you to have access to it. And I think the cool thing about Unit, it's going to tokenize the world in ways that people can't even imagine. And I love investing in people. I don't necessarily agree with all of the ideas, but if I could buy a piece of someone's future earnings and career, I would love to do that. And
like
that's
the Bowie bonds.
Spot on. And if you think about applying that to 8 billion people, I think that's what's so revolutionary. And you said earlier in your talk that nothing will overtake Bitcoin, but I think if anything, I think there is a possibility that Unit or Unit Coin or the Unit network can change the world more than how Bitcoin's changed the world. And I think it will see in the next 10 years how it plays out.
Big vision. Michael, thank you
So much, Michael.
Tokenize, let's innovate, bringing assets to the digital state. From finance to games, we're redefining, connecting the dots. The future is shining.